We've got Srinivasan Nadadhur, the Chief Financial Officer of eClerx Services, joining in on the show right now. Srinivas, hi, morning. Great to have you today on ET Now. Srinivas, first, this debate about whether or not services is going to be spared or is it going to be tariffed by the US. I mean, I know, no other country has the scale or, for that matter, the skill as well that India brings with its IT services. I mean, and not to say unlike factories for goods, etc., can really, software engineers be replaced in short span of time? The answer is a big no. But I wanted to get your thoughts in.
Hi, good morning, and thank you for having me on the show. So I would broadly agree with you. The scale is so large that it may be difficult to impose tariffs, but previous decisions on tariffs have not been really based on logic, so we don't know.
I can understand that. So you think this is a big risk and overhang then on IT services at large here in India?
There is some kind of risk. I would not, it's hard to quantify what it is because the event is really binary. But there is some kind of risk. But if you were to ask me, I would call that risk as fairly small. Significant impact, but the probability is less.
So tell me, what is it that you're doing as a strategy? Would you look to diversify non-US markets as well going forward?
Well, that has been the plan for us for some time now. And you might be aware that the US accounts for about 80% of our revenues. And we are sort of small in the rest of the world. So for a couple of years now, we've been trying to move away from the US as our predominant geography.
Right. So tell me, Srinivas, what is it that in terms of incremental benefits can you expect from the company right now? Will this really aid in margins going forward? If yes, what is the outlook? Because I recall you had maintained your EBITDA guidance at 26 to 28%. Tell me, what are the kind of numbers that one can anticipate from eClerx in particular?
Okay, so a small correction to your statement. Our range is actually 24 to 28, not 26 to 28. And we are going to maintain that range. We see a decent amount of pipeline today. And if conversion rates remain where they are, and there is no pullback on discretionary spend, then we should be able to show sequential growth in Q2. And our big levers for margin at the point of time is predominantly revenue, and which may lead to some amount of operating leverage kicking in.
Right, I stand corrected about that 24 to 28% range. But also, Mr. Srinivasan, you added several clients, including strategic wins in BFSI as well as CMT2. How is the client confidence now, and what are the demand trends looking like? Are they willing to spend, and are they willing to commit large sums of money to that extent?
So on BFSI and CMT, we think the demand continues to be strong. On fashion and luxury, there is definitely weakness, as we have called out earlier as well. And on the other couple of industries, high-tech manufacturing, there is some amount of caution based on what the tariffs will hold for our clients and what they might have to do in terms of spend with service providers, whether they need to pull back, whether they need to maintain it flat. So that's broadly the outlook of our customer base.
But what's the communication like from your top 3 clients?
There has been no positive or negative indication at the moment. So I would say things remain business as usual.
Okay, status quo. Also, Srinivasan, then, what is seeming like a bigger risk right now? Is it really about it drawing down to, client spends, or is it just uncertainty pretty much across the board?
I think it's largely the uncertainty, which may in turn affect client spends. So uncertainty around tariffs, uncertainty around the demand environment, uncertainty around inflation or stagflation in the US and other geographies. So I think the uncertainty is what is playing on everyone's minds.
Right. So for shareholders, any word on when there will be a buyback and if there would be one in the near term?
I guess the board will consider it because the I think 12 months have passed since the last buyback. So um, I guess the board will consider it whenever the time is right.
Sure. So, as a strategy, just going back to what we were talking about earlier, given the uncertain demand environment emerging out of the US, how is it that business such as yours gear up for it? What's the plan B?
So I think for us and for most IT companies, I think delivery remains crucial. So if delivery is good, then clients may decide to continue spend with you and maybe also introduce other uh, areas of demand may come your way. So I think delivery remains paramount. So if you're delivering well, if the products you're delivering to customers resonate with them, if they satisfy their needs, that's the way to remain top of mind for customers.
Okay, Srinivasan, great to have you on the show. Thank you so much for your time today.
Thank you.
Good chatting with you.